All right, hey everyone. We're ready to jump into another deep dive, and this time we're focusing on Indian pharmaceuticals,
Sounds good.
specifically Entero Healthcare Solutions, and how they did in Q2 of fiscal year 25.
Okay.
We've got a bunch of stuff to dig through.
All right.
We've got their press release, of course, but also we've got their investor presentation and their financials,
Oh,
standalone and consolidated. So we can really get a good picture of how are they doing, relative to the Indian pharmaceutical market as a whole.
yeah. I mean, the thing that really kind of jumps out right away, at least for me, is looking at their growth.
Okay.
So in their investor presentation, they're highlighting that their consolidated revenue went up 31% year over year,
Wow.
and they hit 1,301 crore in Q2.
Okay.
Now, that's compared to the Indian pharmaceutical market IPM overall, which grew at about 8%
Got it.
in the same period.
Yeah.
So, clearly outperforming the market as a whole.
That's a big difference. Yeah, that's great growth, but revenue's just one side of the coin, right?
Right.
What about profitability? Are they actually, are they making money?
Yeah, so their EBITDA margin actually went up by 40 basis points to 3.3%,
Okay.
and that led to a 49% year-over-year growth in EBITDA, which hit 42 crore for the quarter.
Okay.
So, yeah, they're not just growing, they're growing profitably.
That's great. So, what's the secret here? What's driving this kind of performance?
Yeah, so in their investor presentation, they talk about a few key things.
Okay.
They talk about working on streamlining their procurement process,
Okay.
which means they're basically getting better deals, right? Saving money.
Got it.
And they've also shifted their product mix
Okay.
to focus on product categories with higher margins.
All right. Makes sense.
And then they've also just broadly implemented some cost optimization measures.
Okay. So, tightening the belt, focusing on the more profitable areas sounds pretty smart.
Yeah.
But there's another part of this that we can't ignore.
Oh, right.
Acquisitions, right. They made 9 acquisitions in fiscal year 25.
Wow. Yeah.
That's pretty aggressive.
Yeah, it is. And it seems to be paying off.
Yeah.
They're saying that those acquisitions have added 750 crore in revenue.
Wow.
This is from both their investor presentation and their notes to their financials.
Okay.
But what's really interesting is that those acquisitions aren't just, adding to the top line, but they're actually boosting their margins.
Mm-hmm. Huh. So that's interesting. I mean, typically when a company goes on a buying spree like that,
Right.
it's hard to maintain the margins,
Right.
let alone improve them. So what are they doing differently, you think?
Yeah, I mean, it seems like they're being very strategic about what they're buying. Really focusing on companies that either complement what they already do
Mm-hmm.
or offer some strong synergies.
Mm-hmm.
Maybe that leads to cost savings or efficiency improvements or something.
Yeah.
But also, I think it says something about their ability to integrate these businesses effectively.
Right. So, it's not just about buying. It's
Yeah.
about, knowing what to buy and how to make it all work together.
Right.
So, we've got all these financial documents here.
Yeah.
I'm kind of curious to dig into some of the details.
Okay.
Where should we start with that?
Well, we could start by looking at their consolidated statement of profit and loss.
Okay.
It gives us a more detailed breakdown of, where the revenue is coming from.
All right, sounds good. So what are we seeing there?
Well, for both Q2 and the first half of the fiscal year, you see this distinction between Sure. revenue from operations and other income. And that split is really, important to understand because it tells you how much revenue is coming from their core business activities versus, other sources.
Right. It's all about that revenue mix, right?
Yeah, exactly. Yeah.
So what kind of trends are we seeing there?
So if you look at just Q2, their revenue from operations was 1,128.32 crore,
Okay.
which is up from 878.14 crore
Got it.
the same quarter last year.
Okay.
And then other income also went up to 28.81 crore
Okay.
compared to 16.52 crore last year.
So both are growing,
Yeah.
which is encouraging. What exactly falls under other income though for a company like this?
Yeah, that's a good question.
Yeah.
The standalone statement doesn't break it down specifically,
Okay.
but it could be things like, interest they're earning on their investments or gains for maybe selling off assets or, maybe even licensing agreement. It's worth pointing out, like, even though it's a smaller part of their overall revenue,
Right.
it is contributing to the bottom line.
Right. Right. Every little bit counts,
Yeah, absolutely.
especially when you're trying to be consistently profitable. Um, so we've talked a lot about acquisitions, but I'm kind of curious about the organic growth of their core business.
Yeah.
What can we say about that?
Yeah, that's where understanding, their cost structure becomes important. So if you look at the standalone statement again, their biggest expense is the purchase of stock and trade,
Right.
which makes sense, right? They're a distributor.
Right.
So basically, that line item, it reflects the cost of the goods that they buy to, resell to their customers.
Right. So, I mean, as revenue grows, I imagine that expense is going to grow too,
Oh,
right?
yeah.
But the question is, are they managing that efficiently?
Exactly. Yeah.
Are they keeping costs in check while they're, boosting their revenue?
Yeah. And that's where their focus on, the procurement efficiencies
Right.
and optimizing their product mix, like we talked about, comes in
Right.
by, getting better deals on the products they're buying and focusing on selling those, higher margin products.
Yeah.
That helps to, offset some of those cost increases.
Okay. So it's all a delicate balance.
Yeah.
And sounds like they're doing pretty well so far.
Yeah.
All right, so let's look at the consolidated financials.
Yeah.
This is going to give us a broader view, including those acquisitions. What are some of the key things that jump out at you there?
Well, first of all, the sheer scale of their revenue is pretty impressive.
Yeah.
In Q2 they hit 13,6.92 crore
Wow.
in revenue from operations, which is, compared to 9,963.04 crore
Okay.
in the same quarter last year.
So that's a big jump, but revenue's not everything.
Right.
What about the profitability? Are they actually making money?
Yeah.
On all that revenue?
Yeah, absolutely.
Okay.
So their consolidated profit after tax, their PAT, hit 26.03 crore in Q2.
Okay.
Which is up from 5.21 crore
Got it.
the year before.
Okay.
So that's a pretty big jump. Showing that their strategies are working. Especially that focus on higher margin products and operational efficiency.
So they're not just getting big; they're getting smart about it.
Yeah, absolutely.
It sounds like their management team kind of knows what they're doing.
Yeah.
But let's go beyond just the numbers for a second.
Okay.
What are some of the qualitative factors that might be contributing to their success?
Yeah, their investor presentation actually talks about some of that.
Okay.
They talk about, strong relationships,
Okay.
both with their suppliers and their customers,
All right.
and then also, a deep understanding of the Indian healthcare landscape,
Mm-hmm.
and then, a really strong distribution network that reaches, all across the country.
Right. So it's like they've built this machine and they know how to run it.
Right. Exactly.
But even the best machine needs maintenance and needs upgrades, right?
That's a good point. Yeah.
Yeah.
And speaking of upgrades,
Okay.
they're making it very clear they're not resting on their laurels.
Uh-huh.
They're investing in technology
Right.
to improve their operations and their customer experience.
Makes sense. I mean, technology is a game changer these days. What are they doing specifically?
So they've developed this technology platform
Okay.
that basically provides real-time visibility
Okay.
into product information,
Uh-huh.
pricing, inventory levels,
Yeah.
order status, and more.
Got it.
And this platform, it not only helps their employees make better decisions faster,
Right.
but it also helps streamline their, the entire supply chain,
Okay.
which leads to, greater efficiency and cost savings.
So they're using technology to be leaner,
Yeah,
faster,
Yeah.
more responsive to their customers.
exactly.
It's like a digital nervous system for their whole operation.
Wow.
But it's not just about internal improvements, right?
You're right. Yeah.
Yeah.
So they've also created a platform for healthcare product manufacturers.
Okay. Yeah.
Basically, these manufacturers can, showcase their products. They can
Right.
run promotional offers.
Yeah.
They can get market insights.
Okay.
So it's a win-win. It strengthens those relationships
Right.
while also providing a valuable service.
Okay, so we've covered a lot,
Yeah.
We've got impressive financials,
Yeah.
smart acquisition strategy, and now a cutting-edge technology platform.
Right.
So what's next for Entero? Where do they go from here?
Yeah. So in their investor presentation, they outline, their key growth drivers going forward,
Okay.
and they're not afraid to aim high.
All right, well, let's hear it. What are the big plans?
So they're looking to expand both geographically and into adjacent product categories.
Okay.
So basically, they want to increase market share where they already are,
Yeah.
and also move into new markets, new products.
So they're playing offense on multiple fronts.
Right.
That's pretty ambitious, but based on what we've seen so far, I
Right.
wouldn't bet against them.
Yeah. I mean, they've shown they can execute.
Right.
But every growth strategy, it has its own challenges.
Oh, absolutely. And I'm sure you've spotted a few potential bumps in the road here. What are some things that could throw a wrench in their plans?
Well, one thing that kind of jumps out is just the complexity of managing this kind of growth, especially through acquisitions.
Right.
I mean, integrating 9 companies
Right.
in one fiscal year, that's a lot.
Yeah.
And as they get bigger, keeping everything running smoothly
Right.
across all these different companies,
Yeah.
that's going to be a challenge.
That's a really good point. I mean, it's one thing to buy them.
Right.
It's another thing to make them all work together.
Right, exactly.
And it's not just about internal challenges either, right? I
Yeah.
mean, they're also facing a very dynamic and competitive market.
Oh, yeah, absolutely. I mean, as they move into these new product categories,
Right.
they're going to be up against some pretty big players.
Yeah.
So it'll be
Yeah.
interesting to see how they, position themselves, how they differentiate their products.
Yeah. It's like they're entering a new game with some seasoned opponents.
Right.
Speaking of challenges, though, we can't forget about the regulatory landscape.
Oh, right.
I mean, the pharmaceutical industry, it's really complex.
Yeah.
Lots of rules, regulations, and they're always changing. So how could that impact Entero's plans?
Yeah, I mean, that's a big one. In India, the pharmaceutical market, it's subject to, price controls,
Right.
regulatory approvals, and all sorts of other policies that could, really affect their pricing strategies, their product launches,
Right.
and just their profitability overall.
Yeah.
So they're going to have to be, very adaptable.
So they need to be light on their feet, ready to change course if they need to.
Exactly. Yeah.
And of course we can't we can't forget about the big elephant in the room,
Oh, wait.
the global economic outlook.
Right.
I mean, how could things like inflation or currency fluctuations or even just slower global growth, how could all that affect Entero?
Yeah. I mean, those are some of the biggest unknowns, right?
Yeah.
The Indian economy, it's strong, but it's still connected to the global economy.
Right.
So any, turbulence out there could definitely impact India and the pharmaceutical industry as a whole.
Right.
So they're going to need to, keep a close eye on those macroeconomic trends.
So it sounds like Entero, they're on a great path,
Yeah.
but they're also facing a lot of potential challenges.
Right.
But they've also shown that they're pretty resilient.
Yeah, I agree. And what's interesting about them is that they seem to, view these challenges as opportunities.
Okay.
They're not just reacting to what's happening. They're trying to shape the future.
Right.
It's a story of ambition, innovation, and good execution.
It really is. So for everyone listening, as we wrap up our deep dive into Entero Healthcare Solutions, remember, their recent performance has been fantastic, but their future success really depends on, how they navigate all these challenges and how they take advantage of the opportunities that come up.
Yeah, they're definitely a company to watch.
Yeah.
And I think, their story offers some valuable lessons for anyone interested in the Indian pharmaceutical market,
Right.
but really for any business trying to grow
Right.
in this ever-changing world.
Couldn't have said it better myself. Keep an eye on Entero, folks. Their story is far from over.